Ben ritrovati lunedì mattina su floor del New York Stock Exchange, tipica giornata di agosto, volumi di scambio ancora molto contenuti, l'economia torna sicuramente in primo piano, come anche le ultime notizie che arrivano dalla campagna per la presidenza. Ne parliamo con il mio ospite qui su floor, come ogni lunedì è Kenneth Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us.
Thank you for having me. It's always a pleasure.
So Kenny, I was saying that probably it's going to be another typical August session. Volumes are still very low. We had a good run. We had 5 weeks in a row of gains.
Right.
What is the market doing today?
First of all, it's going to churn a little bit, right? There was no macro data at all today, and so the market's going to kind of digest the recent moves, certainly of last week. This technical resistance at 1400, we keep playing with it. We're a little bit on the north side of it, and then we come back below it, and so it's struggling to figure out whether or not it's really resistance or is it support. We got more negative kind of macro data coming out of Asia overnight, which I think is just kind of setting the tone a little bit. You got Angela Merkel, who came back from her vacation, is kind of getting reacquainted with what the conversation has been for the last couple of days, and so there's some caution in the market, but caution that is, I think, to be expected.
And caution probably is going to be seen for a few more weeks, right?
Well, it's going to be seen for a few more weeks because, first of all, the German High Court doesn't rule on the bailout funding until September 12th, right? Then you've got the Jackson Hole conference in this country, which is that big economic conference at the end of the month. Then you've got the Republican and the Democratic conventions in this country, and so there's a lot of kind of macro events that are happening over the course of the next month that are really going to keep the market in check. And unless there's some real catalyst, some number, some event that's really going to cause investors to change their mind, I think you're going to have this slow churn, right? I don't think we're going to collapse, but I don't think there's any reason for the market to really take off until you get some clarity.
Unless we have, of course, dramatic news from all over the world.
Well, that's right, and I would venture to say that it would be dramatic news out of Europe and out of the bailout fund and out of the ECB. That will certainly be enough to kind of get the market going again. That, or you have the Fed that comes out at the end of Jackson Hole and said that they're launching a QE3 program, then that'll get the market going again. And so the market and investors just going to kind of run into a week or two here of where it's not going to do a whole lot, and so therefore it's better to be patient.
You were mentioning Jackson Hole is going to be exactly between the two political conventions, so probably we're going to have 2 full weeks of reaction to both politics and Federal Reserve signals. Do you think that Ben Bernanke will be influenced by the convention, that it will be a week before him, the Republican convention?
I'd like to think that he is not going to be influenced from the political agenda, right? I mean, in fact, he's not supposed to be. It is a standalone organization, and they're supposed to make their decisions just based on economics and monetary policy versus anything that comes out politically, right? So they can't be seen as being politically motivated. So I would like to think that the answer to that question is no, but I also think that Ben Bernanke is kind of in a tough spot, right? Because if he launches a QE3, either side could argue that it's politically motivated, right? And if he doesn't launch it, they'll argue that it's politically motivated. The Democrats will say he didn't do it because they don't want the economy to turn around. The Republicans will say he did it because they want the market to go up and everyone to feel good. And so either way, I think he's in a very tough position, which is why I think, for the last couple of months, we've been talking about the fact that if he's going to make a move, he's really got to do it before. This way, then, it'll be less of a point here, right?
Or right after, like after November, but it might be too late at that point.
Right. I mean, if he does it after November, it's going to be after the election. At that point, it is what it is. And so, but I think, listen, we had some other exciting news over the weekend. We had Romney come out and pick his running mate. And Paul Ryan, as far as I was concerned, was someone I hadn't given a lot of thought to, and then all of a sudden, when they announced it, I sat back and I spent all weekend watching the news and thinking, this was really a brilliant move on his part. Now, certainly the Democrats will come out and slam the move, and the Republicans will come out and support the move for sure. But I think if it does nothing else, it's going to bring the discussion right to the point. It's going to bring the issues right to the point. They're going to have to talk about the issues. They're going to have to really address the issues for the American voter. And so I think it's going to be a very, very interesting time over the next couple of months.
And the issues are, of course, we're talking about the deficit, the big giant gorilla in the room. Together with the economy, probably they're going to decide at this point the election.
Listen, there's a lot of gorillas in the room, right? There's Medicare, there's taxes, there's the fiscal cliff. And so that's right. They're all linked together, but there's, all those different elephants or gorillas in the room. And so that's why I think it's going to be a very interesting couple of months, because I think that Ryan, who heads the Congressional Finance Committee, is well attuned. He's certainly well informed. He's certainly able to have these conversations, and he's able to force the conversation, not force it in a bad way, but force it that people are going to have to address it. And so
Well, also because he has a plan. He has the Ryan plan, and it's been discussed for months and months, even before, of course, the election cycle.
Right.
Very controversial. You were mentioning Medicare and Medicaid. But he also have, strong ideas on defense. He has strong idea on capital gain taxes, and he wants to reform also, the tax system. So what do you think Wall Street wants to see?
Well, listen, I think Wall Street wants to see movement, right? They want to see clarity. The Wall Street is tired of kind of the cloud that's hanging over. Now, listen, it's not going to be comfortable. It may not be pretty in terms of reform that this country needs. But the flip side of this coin is, unless we do something and unless we reform, we're going to find ourselves in a European-style debt crisis ourselves. And listen, we're witnessing what's going on in Europe right now amongst not even just one country, but across a range of countries. And I don't think it's a place that anybody wants to be in. I don't think anyone's envious at all of any one of those countries. And that's why I think this is going to have to force a conversation, and Americans are going to have to really understand what the issues are and come to grips with it. And I think they will.
And they have a few more weeks, to explain that.
That's right. They have a couple of weeks. Listen, when they have their convention, the platform will become clearer, right? For people who say, well, we don't know what the platform is yet. Well, you're going to find out in a couple of weeks, right? Once they synthesize it and they have their convention and the platform's out there, then it'll be a level playing field on both sides, and then we'll move forward.
We'll see, of course, how the market will react day by day. Thank you very much, Kenny, for being with us.
Thanks for having me.
E grazie a voi per l'attenzione. A domani.